Apurva Prasad joins us, AVP Research with HDFC Securities. Apurva, if Infosys numbers are anything to go by, and for Infosys, my sense is that it had a slightly lower growth than TCS for a long period of time. If a slow mover is coming out with a earnings upgrade or a guidance upgrade, are we in for a surprise from TCS after last quarter's disappointment?
No, I think the near-term trajectory is unlikely to change for TCS. So we are expecting 0.7% constant currency type of a growth for Q1Q basis and slight expansion in margin about 25 basis points. So I think the trajectory from last quarter is unlikely to change. There are clear headwinds in capital market and BFS segments in Europe and North America. Having said that, I mean, they have come off from the double-digit trajectory. I think it's going to take a while before they get back towards that. So right now, we do expect them to sort of operate at sub-double-digit growth rates. So we expect about 8% dollar revenue CAGR going ahead.
Why do you think we are not in for a surprise from TCS? I'm just appreciate my curiosity here because Cognizant numbers were decent, Infosys numbers were not that bad. So has anything changed in the environment within the industry which may just warrant this kind of a surprise which we'll only figure out today along with the numbers?
Well, I can't speculate on the surprise part, but I can tell you that Infosys numbers were largely in line. If you look at Accenture numbers, they upped their guidance. And if you look at some of the contracting data that came out a few days back, that indicates that growth for CY20 should be at similar levels of the previous year. So from that perspective, there is not going to be a significant growth divergence. Having said that, you must look at the growth profile, how that's been for the year FY20, and we're nearing the end of that. Most of the incremental profit growth in FY20 is largely contributed by, I think, the top three companies. I think that's expected to broad base going forward. And I think that's how it's played out in terms of valuation too, when you see a big skew between the largest player as well as some of the others. So if you see in terms of valuations also, if you X out Tier 1 IT and TCS, the discount of Tier 1 IT X of TCS is probably the highest ever versus TCS. And even if you look at the Tier 2 IT pack, the discount to that, while it's not at the peak level to the Tier 1 IT, it's still at near peak levels. And with the expectations that Tier 2 IT or mid-cap IT is going to go back to a growth premium, the earnings growth premium versus the large cap IT, which has traditionally been the case. So for FY20, it should be at parity. Beyond that, it should go at a slight premium. I think there is a fair sense that there can be some more broad basing which can play, especially from the context that it was getting a very skewed market within the IT space.
Let's flip it around. On a one-year basis, or let's say on an 18-month basis, how do you think the pecking order in IT is likely to move? You've got TCS, which is commanding premium valuations, HCL Tech, which is trading at low P multiples. Where do you think the convergence will happen?
Yes, I think one convergence is certainly Infosys TCS. That's what we've been talking about. So I think the convergence between Infosys and TCS can probably further happen, which had widened significantly till a few weeks back. I think that is one trade which may play out. HCL, in terms of target multiples, while we don't see too much of a convergence, but there is very strong organic growth which has come back and industry leading growth. So I think that is going to at least support these kind of valuations, while the product piece of the business that starts to deliver. So I think I think Infosys valuation gap versus TCS is probably likely to narrow.
One very broad-based question, and this is purely based on the data which I looked at a couple of days ago. Indian currency for the decade gone by has depreciated by more than 50%. And IT companies, in a sense, have struggled. They've struggled with growth. They've not had linear margin expansion despite a morphing towards digital and the currency support. I wonder structurally, if the currency remains where it is, what is in store for them? Because on the digital front, yes, the growth will continue, but on the currency front, that headwind may not be there.
Yeah, so I would slightly disagree on one aspect. I mean, if you're looking at 10-year perspective, I don't think the IT index really underperformed the broader index. So that's one. And if you look at the pace of currency depreciation, which used to be as significant as 4 to 5% annually, that's obviously come down in the past few years, and that being the biggest tailwind for the entire sector, which has not been the case. Having said that, there are a lot of efficiencies which have come into the system to counter the tailwind, which is not there as much as what it used to be historically. So whether it is in terms of efficiencies, utilizations, on the supply metrics for most of the IT companies, in terms of the level of retraining efforts that have gone into move people on the digital side of the business, I think that's been tremendous the past 3 to 4 years. So yeah, I think there are going to be winners and losers in the game. But having said that, I mean, our pecking order remains the same. So we do prefer Infosys, HCL Tech, and TechM in that order in the tier 1 IT pack. And within the mid-cap space, we like an L&T Infotech, L&T Technologies, and a Sonata.
Great to have you in the show.